So if you take $400 gold in 1980 and inflation adjust it to the present, it should be about $1,500. So gold has worked a little bit better than sort of tracking inflation, fiat inflation caused by fiat currency debasement. But that hasn't really helped the juniors because the gold stock has doubled in the past 30 years, and we've harvested the low-hanging fruit, and we kind of need a higher real gold price, not one that is just chasing the costs of operating and costs and capital. So my question to you guys is, what could be a driver for a real price gain in gold to say $2,500 to $3,000, where the gain well outstrips any capex or OPEX escalation? What do you see in this sort of near future that could make that happen and give that leveraged impact to ounces in the ground and lower the grade needed for exploration targets? And any one of you want to start first? Or?
Yeah, I'll take a shot at it. Challenging question, but I think, when I think back to 2020, when the gold miners had it so good for like 5 months, it was a time of lower inflation, obviously March through August of 2020 due to the pandemic. And yet the Fed was doing extraordinary things to stimulate the economy and backstop the financial system. So we had a big nominal move in the gold price, about $600 an ounce. And inflation was still under 2% for a very transitory period of time. And obviously that changed very quickly after that. But that was like the perfect environment for gold mining stocks. And they performed very well during that run. So I feel like we have to get back to a time of moderate inflation. So 2% or somewhere thereabouts. And yet the Fed still has to expand its balance sheet and keep interest rates extremely low because the economy is weak, and the jobless rate goes up. We might get unemployment above 5% again, at that point. So something like that, where the economy is weakening and the Fed has to do more, but inflation does not go from 2% to 9%.
Okay, Greg, you want to give it a shot?
Me, yeah, no. We're gonna, like you said, the question is a real rise in gold. You're gonna have to have a real move, a significant move, not something the $10 above the last new high. We're gonna go screaming through 2,100. You'll know that it's underway, and it'll have something to do with the dollar, because the opposite of the dollar is the gold price, and they're inverse to one another. So I think something is going to happen with the dollar. We know 80% of the world is moving away from the dollar. They're fed up with America abusing its system of credit. And, the Saudis have announced they'll take other currencies. So it's not only the benchmark that's on the line. You got the petrodollar, and the powers that be don't want to let that power go. So there's going to be a fight. And as that transition happens, when the upper hand goes to the gold side, it's going to go big time.
But that is an example of even if the US dollar goes down relative to other currencies, the costs of mining and building stuff are real costs that'll simply be reflected in whatever other currency. So we don't really benefit from that. So Peter, maybe give a shot for what could, in my view, it's more demand for gold, packing away gold. What's going to cause that to happen on a bigger scale than it has since 1980?
So I have, I guess, two thoughts. One is a market crash. See stocks come down from where they are 20% over the span of maybe a month or a couple of months. I'm not saying we're going to get that. I wouldn't be surprised if we see a constant, gradual grinding downwards that could go on for years, in fact. So that may not be a trigger. Somewhat to Robert's point, and I'm sort of partly in agreement, in an environment where you have, let's say, the Fed starts to pull back on rates, starts to, a recession kicks in, they start to lower rates, and then you have inflation start to kick back up, and then they really feel like there's just no way we can do this anymore to start increasing rates. You know, we've seen what it done. Look at what happened to banks, and they just feel like their hands are tied. And if that kind of scenario could play out, I certainly could see people really sort of piling into gold.
Oh, and Eric, the sort of question is, what could drive the price of gold higher that leaves the costs of operating or building a mine stranded? In other words, what I call a real price increase. What could increase total demand for gold so that it is priced more in real terms?
I mean, one thing that I don't really see it in the market yet, but one thing I alluded to in my talk yesterday, and I brought up a chart of it's an annual survey that it's Reuters that does it, but it's basically asking people to rank different asset classes. So it's very generalist, like stocks, bonds, gold, cash, whatever. There's only 4 or 5 of them. And in all honesty, I mean, I'm not really a gold bug, but I mean, obviously, I'm up to my eyeballs in gold stocks, so it's not like I don't care. I do. I was shocked. I was honestly shocked when I looked at that survey, and the only thing that was above gold this year was real estate. Real estate was number 1. Gold was number 2, and it wasn't very far below real estate. And stocks and bonds are both way lower. And I'm like, what the fuck? Like, when is that ever? Like, I've never seen that before. But, you know, the reason why we're starting to see those kind of responses, and like I said, I'm not really seeing it in the market. Like, I'm not seeing lineups at gold shops or anything. But the reason, and this is probably a big shock to anybody that's, you know, known and loved gold long enough, is performance. Gold is actually one of the best performing asset classes. In fact, it's the best performing asset classes over a number of time frames now. And nobody ever believes that when you say it. But I mean, I don't make the rules. I didn't do the calculations. So other people's calculations going like, you know, 2-year, 10-year, 20-year, it's right up there. That's why it's listed. And this is really over the last year. It went from, I think it was like 16, 17%, which is respectable. Like, number of people saying, yeah, it's the best asset class. Like, and the question was, which asset class do you think will perform the best over that? I think it was 1 to 5 year time frame. And gold's usually in there. I mean, there's a bunch of people like gold, so it's always there. But I think last year was like 15, 16%. This year was 24. And I think real estate was 26. So if that line keeps moving, that may be all it takes. It's like, you know, why do tech stocks perform well? Because everybody thinks tech stocks perform well. That's why they perform well.
My own view as to why a real price and increase in gold is coming is because I see this conflict, this geopolitical conflict between the global West and the global East, headed by China and Russia, not being able to be repaired, and the global economy fragmenting into separate trading units, with the global South picking and choosing which one it wants to deal with. And I think that means moving away from reliance on the US dollar, and I see gold as a bridge, so central bank demand. I mean, it's interesting to see the point you make that gold went up last year, even though you looked at the GLD holdings and they flatlined. It's not retail, it's not institutions, it's either very, very wealthy pockets or government level buying that's driving this in anticipation of this shift. But the next question is a variation on, suppose we do get this fragmentation. And, you know, I have a graphic that shows that of the 50 or so metallic and energy commodities, Russia and China together supply more than 40% of 19 of them. And if we do get this sort of split where the global West and global East aren't trading with each other anymore, what metals, like not gold, but what other commodity metals should the resource juniors be chasing, and in what jurisdictions? You want to try first, Eric? or think about it and let Robert start.
Right.
Yeah.
This is supposed to be 30 pieces of silver, wasn't it? Sorry, little Bible joke there. One, which is not a metal I like it, but it's not one I ever think of sort of being undersupplied. Is probably zinc. A lot of zinc comes out of China.
Yeah.
I mean, China is China's the 800-pound gorilla when it comes to about everything. When it comes to demand, it's not as big a a zinc importer as it is of other metals because there are, in fact, a lot of zinc mines in China. So it's not, they wouldn't necessarily displace a huge amount, but I think it's something like 30 or 40% of their imports. But they also, they do some shipping of zinc metal. So I think it would probably mess up the zinc market for one thing, because there are actually a lot of zinc mines. Rare earths, of course, is another one, just because it's not like they have all the rare earth deposits, but they have just about all the rare earth processing. So if they literally stop trading, it's going to really screw that up. I mean, I know there's groups starting to build processing facilities in North America, but obviously any of the deposits there would be out the window. I can't think of too much. I mean, those are just kind of the obvious ones that come to mind for me.
Yeah, well, don't use them all up. Give the others a chance to come up with some.
I would say lithium and copper, because there's so much lithium in the brines in South America, and the risk of some of these countries aligning with the East. I would suggest that lithium in the North would be something that would be worth exploring for and focusing on, and then in copper in much the same way for the same reasons. There are obviously less, but there is copper to be found in the U.S., in Mexico, in Canada, in Australia, and so I think that these are places that juniors, if they're looking for geopolitical stability, would make sense.
Greg?
I would say rare earths for sure. China's always been the 900-pound gorilla in that market. When you find something in North America, everybody kind of goes, well, the China there, you can't get too excited. But if the world was fractured like that and we needed to depend on it in North America, then yeah, I'd say rare earths would be a key metal to go after. I agree with Peter to the extent in copper that, look, copper is coming to a crisis moment. If people want copper, the price has got to go higher. And we see some of these troubles down in South America. If South America aligns with these people, with Russia and China, then yeah, that could go as well. I agree.
I'm surprised you didn't mention uranium, because Kazakhstan is the elephant in the room that's ruined our great uranium story.
For sure.
And I'm sure they're not going to be part of the global West.
You're right. Well, that's why the U.S. supply is the U.S. suppliers are going to be in vogue, like Encore Energy and Energy Fuels. Yeah.
Yeah, I would say copper, zinc, basically anything to do with steel. I mean, if the world splits in two, the U.S. and Europe, South America has to completely rebuild its, manufacturing base and no longer count on China for it. China accounts for half of the world's copper market. The U.S. is a very small part of it now, but obviously that would have to change if China was cut off from trade. So yeah, I mean, anything to do with steel would be very valuable and very sought after. And obviously copper is just an absolute no-brainer.
Mm-hmm. And I would add nickel, not because China and Russia are dominant in it, but Indonesia is now almost 50% of global supply. Philippines, which is right next to it, is another 17% or something like that. And where will those countries align themselves if we do have this global East or West split? So nickel supply for the global West would become a problem in that scenario. Right now, Indonesia is kind of killing the nickel price because it's still globalized trade. But that's one commodity that could also become interesting. Now, related to this question is what jurisdictions where the juniors have been active are you seeing as becoming problematic, and why?
Well, South America is just that's pretty obvious answer, because it's moved so far left, and there's not any certainty in many of the countries with regards to mining. South America and Central America I think are increasingly problematic. But on the flip side of that, it's a big part of their economy. So I think when the rubber meets the road, they will vote for mining. But it is a lot more challenging.
I'd say Mexico as well, because, Mexico's a big mining part of ours. I've been to Mexico next to Nevada. I've been to Mexico just as many times as Nevada, and site visits, and to see them joining with the BRICS, the neighbor next door, that's kind of shocking. So it's hard to know how that would play out, but yeah, that's a concern. I agree with the South America. We're seeing good Canadian juniors down there that are making discoveries like outcrop gold and silver, and all of a sudden they're having the rug pulled out from under them, and they keep saying, "Oh no, we're going to take care of mining," but everybody else thinks differently, right? It's very worrisome.
I'd agree that Mexico is something to keep an eye on. It is obviously concerning what's taken place in the last little while, but similar to what Robert was saying before about when the rubber meets the road. I mean, I was speaking to a mining CEO just recently who operates a mine and is exploring, has big projects, and said that based on their I guess what they consider very good information, as these laws actually get written, they get considerably watered down from what the rhetoric is to start with. And that's, I'm not saying that's the same everywhere. I'm saying that this is what I've heard about Mexico specifically. And so when those laws actually get written, apparently they will be nothing like, I guess, what gets votes. So, all of this gets tempered, or not always, but in some cases, it certainly gets tempered considerably by the time you reach. That doesn't mean that it's not important, because in the meantime, share prices go all over the place. And so that doesn't mean that your net worth is not affected by it. But in terms of practical sense of dealing with these places and getting permitted, getting things eventually built, it may not always be quite as bad as it sounds initially.
Yeah, I mean, I think that's the tricky thing with the geopolitics and country-specific politics is ideally you need to try to find somebody who's plugged in that country, because it's always a lot more nuanced than you see in the headlines. I mean, Chile is a good example. Their fairly left-leaning president came out. He put together a committee, and that committee was stacked with people that were anti-mining. That's why he put on the committee. And they came up with a bunch of stuff that sounded really draconian. It was a tax regime that would have basically blown anything at the development level out of the water. But the truth of the matter is, it was a situation where, given the seats in the Congress, given how the distribution was between different parties, that thing was never going to see the light of day. But it really wasn't until it went to a vote in Congress, and Congress was like, yeah, fuck no, we're not doing that. Up until that point, it was really tough for guys who were in Chile. If you already had your concessions, if you're drilling great drill holes, great. Anybody trying to set something up was really difficult because everybody was seeing these headlines. Mexico, I hope, is the same way. We may need to wait for a change of government. I mean, he's trying to change the law so he can run again. It's 2 terms are the same as in the States. So, but again, he put in a mines minister. She hates the mining sector. I mean, he intentionally put somebody into that job who was just going to be a disaster and go out of her way to try to stall things because she's got a green agenda. But does that mean none of this stuff is going to happen, or does that mean this is just another, political flash in the pan? As somebody trying to, it's fake news, somebody trying to get headlines, and 6 months later it's all gone. It's too early to tell with that one. But, I personally, I kind of lean towards, ultimately it's not going to be as bad as it sounds right now, just because the sector is so important in that country. It's tough because a lot of it's, it's election by election. Right? This stuff just swings all over the place.
The disturbing trend I'm seeing is that Latin American countries are swinging towards leftist autocracy. African countries are swinging toward right-wing autocracies. And China is agnostic. It doesn't care whether you're a right or left wing. Yeah. It's very different from the Russia-US conflict from the Cold War, where Russia actually wanted everybody to be a communist. China doesn't need you to be like them. They just need you to serve their needs. So I see in the sort of right-wing autocracies, corruption, the juniors can't really compete there. And I think they're being squeezed out by the trend towards resource nationalism. And I'm very bothered that Mexico is now going that way. So let me flip the question around a bit. When you're looking for new picks to refresh your portfolio, which jurisdictions are you preferring these days?
I mean, I'd have to say North America. I'm still, I'm not scared off by Mexico. I'm not very comfortable with what's going on there, but still, I just like it as a country. It's got, it's got great projects. It's got a mine. It does have a mining culture. It's got skilled labor. It's got everything you need. South America, I've always kind of stayed away from Bolivia because they just swing so back and forth. Although guys that are working there say it's not that bad. Peru makes me a little nervous, but I think Peru's one of those places where even getting down to country level is enough. You have to get down to like state level, county level almost. You talk to people that know Peru and they're just like, it's not enough to look at Peru. You have to look at the valley the claims are in Peru. Because if it's an area where, they've been mining silver for 300 years and everybody's grandfather was a miner and stuff, and you know how to deal with social license, you'll probably be okay. If you're on the other side of the mountain where it's 100% agrarian, you're effed. Like, you're not getting a permit. Not going to happen. You have to almost get down to that level. So I try to find that out when I'm first looking at stuff, but there's not too many countries, I mean, I love the geology in Argentina. I'm a little bit leery about it because, again, it's one of these, it's pretty unpredictable politically. It feels like with the recent discoveries by Lundin, Filo and that, it seems like that there's such a gravitational pull there economically. I suspect that's actually going to help everybody. I think the guys in Buenos Aires are going to say, yeah, we got to make sure this thing works. It's just too much money here to leave on the table. So that may help anything. I mean, really, the countries I wouldn't deal with have never really changed that much. I mean, I was never a guy that went anywhere near Russia because it simply can't be trusted. Most of the countries in and around it, I'd be leery about almost any of the satellite countries. I'm a little bit leery about. I'm mainly okay with Africa, West Africa. I mean, for some reason, it's really kind of fallen off the radar, and people don't trust it for some reason. But I don't see people getting any more problems there than they got 20, 30 years ago. But by and large, the West African countries want mining. It's quite important to them, and I think the biggest thing going forward is, if the big picture thesis is right, and copper goes to whatever the hell it goes to, all these things go up 3-4x. The biggest thing we're going to have to deal with, and unfortunately, there's no getting around this. It's happened before. It's going to happen again. Prices go up enough, governments get greedy, and they're going to try to screw you and get a bigger piece of the pie and tell you, it's not fair that you've got these copper claims and copper's $10 a pound. And it's like, yeah, you're right. Where the hell were you when it was 80 cents? I didn't see you complaining about me spending money back then. But now it's a problem. Unfortunately, that's politics. That's how it is. I mean, God willing, we all get those metal prices we're dreaming of. We're going to have to deal with that shit. It's same story, different day.
So, Peter, which jurisdictions do you now sort of are thinking, do you prefer to place resource bets on?
I'm very comfortable with Canada because Canada is a country that you don't get bait and switch in Canada. You just don't. I mean, there's lots of people, I think, in government that maybe feel the revenue stream from resources isn't fair, whatever your definition of fair is, but Canada is not a place where you're going to screw people around. Like, we just don't do that. I think you're kind of okay in the U.S., although I think we might see higher things there. I'm willing to take a shot at Mexico just because I trust it. I'm not that, especially with what's happened recently. There's nowhere really other than Bolivia, and even Bolivia I'm not that bad on. Colombia I'm okay with, but only for high grade. I wouldn't be trying to dig a hole in the literal sense. It's a hole in the ground. Most of that country you're never going to get permits for that. So I'd say North and South America and West Africa. That's pretty much it.
Some, I think, places that you might not expect to hear, but for gold, Japan. A couple of companies have started. They've actually changed their laws dramatically in terms of mining, and it's become a lot friendlier. Actually, same goes for Morocco, another place that's looking quite attractive. Besides that, I think that we're going to see, especially with this whole green transition happening and so on, I think we're going to see Western Europe and Eastern Europe might actually become friendlier than we thought that they were. And then North America and Australia seem to be pretty much a given.
Greg?
Yeah, I pretty much stay close to home, North America, Central America, South America. I've got 2 companies in Colombia right now that have gone through some real worrisome moments with the change politically there, and we don't know how that's going to work out yet. The dialogue seems to go back and forth, but I'm hoping that it'll work out and be okay. Obviously, I've been involved in Canada a lot. 2 trouble spots in Canada that I'm recently hearing through Evergold. Northern BC is having some issues with First Nation groups. Not all of them, but select ones are causing some problems up there to prevent mining. Obviously, there's an anti-mining movement happened in Yukon, oddly enough, after the Yukon gold rush years there that we had. It's surprising to see that, but otherwise, Canada's great. Nevada's great. Mexico, I'm with Eric. You know, I've been to Mexico so many times, and I just trust what happens down there. It's mining law is pretty solid and proven, and the people benefit so much from it. So I see that still being okay. It's just shocking to see them getting lined up with the bricks. That's all. I don't know what that means, but South America, you know, a lot of these countries are really in trouble with their currencies. You know, they've abused their currencies, and they you know, it causes inflation. And you know, I've been down there. The people in Venezuela have suffered terribly with that whole regime, and want to invest in Venezuela, but I love Chile, Colombia, you know, Peru. Peru's good.
Robert?
I mean, I think you have to go where the big assets are. So it doesn't really matter where it is in the world. If it's big enough and there's enough there in terms of the economics and taxes for the government, I think it can work. Obviously, I'm biased. I like the States. I like Canada. I'll always go there first for pretty much anything. I think with copper, we're in good shape in the Southwest, you know, in the U.S. I love all copper projects there. And you know, Canada is also having a bit of a resurgence for copper exploration. And, you know, as far as South America goes, it's really, permitting is very local. So while, yeah, you need a federal permit to actually have a mine operating, if the locals are very in favor of your project and you've done things right, you can get it permitted, even with somebody like, you know, Petro as the president. And Petro may not be president two or 3 years from now, right? They change. So go where the big assets are and do things right, and you can, you know, get it done.
Yeah, my own sort of preference these days is Canada, the United States, Australia. But here's a third rail question. I think Canada is poised to have an incredible exploration boom because it has so many resources that people dismiss as sort of being lower grade than in other places like Africa and Asia. But if these regions become out of bounds, and let's say ESG considerations actually stay or become a factor, we're going to see higher prices for materials that come from jurisdictions such as Canada. But the third rail question is First Nations, who are asserting sovereign ownership of the mineral rights of Canada. How do we, as sort of commentators for the sector, how do we deal with this third rail topic, especially given that it could completely screw up the Canadian jurisdiction as a place where you can explore and develop deposits?
It varies pretty widely from band to band, I think. I mean, there are some bands where it's going to be difficult. Like they simply don't want development. And in the current political climate, it's not optional for a miner. I mean, you have to get those guys on side. Like, you have to get them on side, period. I don't want to really get into the philosophical argument of, I mean, I don't love the idea that of literal prior consultation. I mean, sorry, First Nations, but there's also commercial things. I mean, if you're doing regional work in an area, it's not practical for you to get the okay from the band, because if you're getting an okay from the band, you're telling everybody what you're doing. So it's kind of counterintuitive. That said, it's not the same everywhere. I mean, probably the most interesting, meaningful, useful conversation I had at PDAC this year was with the guy who is the negotiator for the Tahltan and the Wet'suwet'en. I think he's Tahltan, but he's, they kind of banded together in terms of negotiating with companies. And I said to him, look, I mean, we all know what the perception is. You guys hate miners. You don't want anywhere near it. Like, get these guys out of here. And he just he laughed and he shook his head and he said, it's not a chance, man. I said, are you kidding? He said, we're in the Golden Triangle. Yeah, we love it. Yeah, we want to protect as much of it as we can. But he said, it's not like I'm going to be planting carrots next year. I'm in the Golden Triangle. This is what there is to do here that's wealth generating, not just for those companies, but for us. And he said, as long as we can sit down and negotiate a deal where we get benefits, we get training, and yes, our guys have to show up every day. They got to do their job. They got to learn the skills needed for mining. Like he said, we're all in, man. I'm like, seriously? He's like, 100%. He goes, yes. That's where the economic future is for us. He said, are we going to give it to you for free? No. Are we going to be totally unreasonable? No. We know what it costs. And this guy's the guy's a lawyer by training. He's like, we know what it costs to build these things. We know what the economics are. We realize there's a point which you can't push and have a project be viable anymore. But he said, no, this is how my bands are going to get to the next level economically and create something for future generations. He said, as long as the deal's okay and we're comfortable with the companies. And he said, to be clear, he said, we have deals with several of the big companies up there. We're very comfortable with those guys that they aren't going to screw this up. They aren't going to make a mess. And he said, if we've got that, he said, yeah, we're in.
Does anybody else want to add?
I mean, I would just add that I think that in many cases they're probably being underestimated. I would think that it would be smart to engage. It's obviously going to vary a lot by company and by stage and so on. But let's say somebody who's just getting started and they think that there may be something in a certain area, region. Start by engaging those people even before spending much, if any, money and seeing what the response is. And if you feel like they're serious and you can get somewhere, then try to take it to the next level. And if not, maybe decide that it's not worth it and look elsewhere.
Anybody else?
No, I got nothing to add on that.
All right, next question. Energy transition is the new buzzword for climate change mitigation goals, where the goal is to limit the global warming from to 1.5 degrees Celsius by 2050. And the International Energy Agency did an analysis of the various technologies that can help achieve that goal. And one of the interesting parts that came out was the 2030 goal for EV deployment. And I was absolutely stunned that they predict, based on what goes into these cars, we need 50% more copper than what the macroeconomy will need in 2030, 100% more nickel, 100% more magnet rare earths, and 600% more lithium. Now, to me, this is a story that overrides all these other global geopolitical conflict things. This is a story for the juniors to go after. But my question for you guys is, do you take the whole energy transition goal seriously, or do you think this is just something that's going to fizzle and disappear so that any effort we do in this direction will come to naught?
I think the EV revolution is very real. Every time I drive a Tesla, I absolutely love it. All my friends who have Teslas love it. So it's real, it's happening. The 2030 goal is a joke, though, just like a lot of other, mandates and big dates set by, governments. It never happens according to their timelines, right? But it's going to happen gradually. It's not going to happen by 2030, but it is a boon for the mining industry. It's absolutely a boon for the mining industry. And it's great. I love it. I'm not sure it's going to affect the climate change because it's going to require a lot of energy for all this mining to happen and all this extraction to occur. But hey, I'm for it.
Greg?
Yeah, I mean, the 2030 goal is completely delusional. Anybody who believes the world's going electric by then doesn't understand basic math and, the amount of, copper and all these minerals that would have to be mined. There's no possible way that can be met, period. So that's delusional. I think, the whole EV, I think, yeah, it's a neat thing, but I'm looking at this Toyota engine, the new Toyota engine. Is that going to compete? Are there going to be other technologies? It's going to take a long time for this EV thing to play out. I think some other technology can come in and change that, and we'll see.
I would agree. I don't think that we're going to meet those goals, and I think that besides what has been said so far, a couple of things are likely to happen. One is this polarization or deglobalization. That's going to make it more complicated and more expensive and push it back. And I also think that economically, we're probably in for some shocks that will also push all of this back that is not being accounted for. And so, I mean, that's basically, it's not detailed, but those are some of my thoughts in terms of the likeliness of meeting these goals.
Same, basically. I mean, I think part of what's going to determine the timing of this rollout is the mining sector, in the sense that there's always this push-pull with pricing, right? I mean, if things went half as fast as the bureaucrats wanted it to happen, and suddenly copper was $8 a pound because of that, that'll slow it down. I mean, there's going to be this push-pull based on economics getting to the point where it doesn't make any sense. And I think it's going to be very much in flux too. I don't know whether today's Uber battery is going to be an Uber battery 10 years from now. It seems like there's a whole bunch of other ones getting tried out. Plus, I think as this goes forward, and I think it's a good thing. I don't think the shift is a bad thing, but I think as we get further into it and people get a little more into the weeds and start actually properly accounting for the costs of the different things and the energy usage of the different things, and how dirty some of these green things are. I mean, everybody just looks at the Tesla in the showroom and forgets what has to happen for that thing to get built. And that's not a bad thing. I think it's just maybe we'll shift their priorities a little bit in terms of what's the best way to generate energy and stuff. But I think the change, to me, it just feels like it's got too much momentum. I don't see it how it's going to be stopped now. I'm also a little cynical about how much difference it's actually going to make in terms of the climate. But, once the bureaucrats get their arms around this stuff,
An example,
they're hard
Josh.
to stop.
Yeah, I mean, I have a ranch in Wyoming, and the wind technology, the people are starting to discover what the real costs of this are. These blades wear out, and they have no way of cutting them. There's no technology known to cut them, and it's a big deal now. A lot of people are regretting all these wind farms around, right? Because the cost to the public is going to blow people away. It's astronomical, and it can't afford it. There's costs there that they didn't understand, and people are starting to get angry now.
Yeah, I mean, the true cost of a lot of these things, you don't know until you've gone through a whole production cycle, I think, and we're just getting to the point now where you're seeing that, this is what the cost of this type of energy projection is. It's shifting quite widely. So, everybody's got these projections based on what's happening today, but I think a lot of this stuff's going to shift around because, wind's one of those things where the actual cost per kilowatt hour is way higher.
Ridiculous.
Yeah.
But I should point out that the IEA 2030 goals are only partway of an exponential curve for
Yeah, I
what
think
they need
2050
by
is a real one.
2040 and 50.
Yeah, right.
And but I do find the amount that they calculate for 2030 quite quite staggering. And I do think the car industry has gone beyond policy and has made a commitment. And from a big picture strategic perspective, fusion energy is actually close to a tipping point, and by 2040 and beyond could be a reality. So adapting the transportation fleet to electricity powered, that makes sense. Whether it ends up being hydrogen fuel cells or some newer technology down the road, it's about electricity. So what they're doing now is almost a common sense adaptation to how the future is going to unfold. And this sets me up for the next question, which is about lithium. The value of that market last year was $20 billion, which was 100 times what it was in 2005. It's supposed to expand 600% by 2030 to meet their sort of modest projections of where this trajectory is going. If you, at 1% lithium oxide at the $10 per pound price, which is kind of the minimum you need to see that amount of lithium become available, that's equivalent to 8-9 gram per ton gold or 6% copper. Yet we're dealing with these pegmatite bodies that can be 10 million to 100 million tons. And like Patriot Battery Metals has something that looks like 50 to 100 million tons between 1 and 2% delineated within a space of 2 years. And we're looking at something that if lithium ion batteries don't crash and burn, it's going to be $100 to $200 billion market by 2030, comparable to gold and copper. Nickel and zinc are lower than that. So my question to you guys is, to what extent have you embraced the lithium pegmatite hunt, its second iteration, its post-Australian iteration from 7-8 years ago? And if not, what are the sort of things that you're watching as you're triggered to say, okay, this is real, this is happening, this has running room?
Well, I wish I'd bought it at a quarter. I think I speak for everyone when I say
But you could buy beyond lithium
I
for
didn't.
a quarter
Well, I mean,
tomorrow.
Yeah, I mean, I've got to sit down and look at stuff. The one caveat I have, and John and I talked about this in the bar last night. We should talk about a lot of things in bars. And he knows this just because I'm a fusty old fuddy-duddy. But the only concern I have with lithium, and my concern isn't even the right reason. I guess I still view, and maybe I have to change my headspace, I still think of lithium as being an industrial mineral. And the thing about industrial minerals, as a rule, one thing that differentiates industrial minerals, for instance, from, say, metals, is that generally speaking, industrial minerals have fairly wide availability. There's, in a very big picture sense, there's a lot of it around, but you do have a relatively small number of resources that will end up being mined or quarried because they've got to have the right economics. But because there's a relatively large amount of it around, long term, the pricing of most industrial minerals tends to approach the marginal cost of production. What does that mean in the case of lithium? It means, what is it now, 25,000 a ton, something like that?
Well, for spodumene concentrate?
Yeah.
No, that you're talking hydroxide?
Yeah.
I converted to
Okay.
pounds. Like it was lithium carbonate was $30 to $35 a pound
Right.
all of last year.
Right.
Dropped almost to $10 in the
Yeah.
last 4 months. It's now bouncing between 10 and 20, trying to
Yeah,
figure
and
out
I've got to spend
where
more
it
time on what
stabilizes.
the actual break-evens are, but that's where I see the lithium price going. So I guess what I'm saying is if I'm going to jump on one of these things, I'm always going to be looking over my shoulder, because I've seen this happen in so many industrial minerals where, I talk to guys that are all in the lithium space, and they're like, yeah, 20, went up to 60, it's back to 25, but if you look at these trends, it's got to go up to 100, and I'm sort of going like, no, it's going to 5. And they're like, that's impossible. I'm like, it's an industrial mineral, it's going to 5. Yeah. Question is it going to 5 in 5 years or 25 years? My guess is 5. So I'd say, sure, all in on this stuff if you find something good, but keep looking over your shoulder, because the day's going to, and the reason I'm saying this, to put it in its simplest form, is lithium isn't rare. Pegmatites are not rare. There's shitloads of pegmatites around. One end of the Canadian Shield to the other, there's probably 2, 3, 4 pegmatites per 4 or 5 square kilometers. There's thousands. There's literally thousands of them. Most of them are crap. You know, Patriot hit. You know, they hit it out of the park. I mean, they got thickness, they got grade, they've got scale. I mean, yeah, if you can find one of those, that thing's going to make money regardless. Really, what happens? I mean, that'll go into production. It'll make money pretty much regardless what happens. And the thing, but it's kind of like the uranium was 20 years ago, where there were 400 guys chasing uranium when it went to 150. 20 of them had good projects. The other 380 were shit. And lithium's going to be the same way. So what you need to do is buy John's newsletter and have them tell you which ones aren't shit. Easy peasy.
Peter, any
I
thoughts?
don't have anything to contribute.
Greg?
Yeah, you know, I mean, guys like me doing this 23 years as a newsletter writer, Eric and you, John, would know, we've seen these flash in the pan metals before. And I missed the run in lithium. A lot of people made a lot of money. Congratulations. Does it have more running room? It probably does. But at this point, I feel like anytime I've engaged late in the cycle or late in it seems like I always get burned. So I tend to stay away from these kind of flash in the pan situations. Remember rare earths, John? Remember we were all behind rare earths and we got so excited and all of a sudden we found out China controls the market and there's not a dang thing we're going to do with these, you know.
But that was the whole rationale, because China was putting the supply squeeze on an early version of what I predict is going to be happening. But that was a displacement theory. The market wasn't growing. We're talking about a market that's growing exponentially. It's very different. Uranium is still a pitiful 4 to 5 billion market 20 years after the boom in the 2000s. I mean, uranium's a joke, and there's no growth really to it. And what there is, Kazakhstan can make available if we continue to trade with them. So, I mean, I missed that first boom, the Australian boom. Yeah. I thought the brines will take care of everything, and I was kind of skeptical about EVs, but I'm watching what's happening with the EV adoption by the car makers, starting to understand that the brines may not solve the problem. The brines in Australia may solve only half the problem, and the Canadian pegmatites, yeah, there's thousands of them. We only need a couple dozen Corvette type pegmatites. So there's a race underway now, a second wave, what I call Lithium Mania 2.0, which is unfolding, and we're still in the very, very beginning of it and duplicating what the Patriot battery has accomplished in 2 years. This is something that I haven't seen available for rinky-dink juniors to deliver like really quickly in my entire career. It's much better than the diamond stuff from the 90s. Robert, did you have anything to add before we wrap up?
I'll pass because I see Matt kind of wants to kick us off.